Right now, across the enterprise, autonomous AI agents are moving out of sandboxes and directly into the critical path. They are absorbing customer queues, they are parsing contracts, and routing payments unsupervised. But as these deployments scale, the insurance industry is quietly closing the exit doors. Carriers are filing complete policy exclusions for generative AI, like ISO forms CG 4047 and CG 4048, writing this specific risk entirely out of existence. If an autonomous system makes a $10 million error tomorrow, the corporate general liability policy will not cover it. The premium you pay is now a receipt for protection that has been actively withdrawn. And that financial exposure does not stop at the balance sheet. Under the evolving legal precedents of the Caremark and McDonald's doctrines, liability for unmonitored systems pierces the corporate veil, landing directly on the named individuals who signed off on the deployment. Meanwhile, international frameworks like the EU AI Act are mandating that high-risk autonomous systems be governed by independent, human-accountable monitoring. You have to prove the system is being watched. The tech industry's answer to this mandate has been to deploy a second AI to watch the first one. They use one large language model to evaluate the outputs of another. A monitor that shares the failure domain of the thing it monitors is a co-conspirator. If the underlying software stack drifts or hallucinates, the monitor is compromised by the same event it is supposed to report. This circular reporting structure fails to meet the legal requirements for independent oversight, leaving the underlying risk completely unmitigated in the eyes of a regulator. To see why a language model cannot serve as a compliance monitor, we test it directly in a live terminal environment. We feed the system a highly ambiguous payload. It is a precise 50-50 mix of high-level strategy text and low-level operational text. We then instruct an LLM monitor to determine if this document strictly matches a strategy-only mandate, and we ask it to run this exact same evaluation 5 separate times. On the first 2 runs, a model confidently issues a pass verdict, stating the payload fits the mandate. Looking at this data matrix comparing all 5 runs, the system fails to hold its ground. By runs 3 and 4, it flips its answer to fail, before switching back to pass on run 5. The exact same inputs yield completely stochastic outputs. Because the model generates answers by sampling probabilities, it cannot guarantee a deterministic result, and it cannot produce a cryptographic receipt that a third party can independently verify. This instability is not a flaw in the prompt engineering. It is a mathematical wall defined by Rice's theorem. The theorem dictates that software cannot reliably decide a non-trivial semantic property of other software. To perfectly monitor semantics with software, you need an infinitely long rulebook to cover every possible edge case. Who checks the checker? Another checker, creating an endless, unresolvable loop. At the boundary edges of logic, stochastic AI judges mathematically collapse. They cannot provide the absolute, repeatable certainty that an insurance underwriter requires to price a risk. To escape this software trap, the architecture of oversight has to move below the operating system. We stop asking the computer to understand the text and instead measure its physical execution. This is the principle of semantic equals physical equals hardware. A deviation in the meaning of an AI's output correlates directly to a measurable deviation in how it physically executes on the chip. We start by mapping human language and rules onto a spatial grid. This diagram displays a 144-cell geometric semantic lattice. The mandate for a specific agent is compiled into a hard geographic coordinate, shown here as the green authorized lane. When an AI generates a response, that payload isn't just being read by the processor. It forces the system to take a physical, ballistic walk across the silicon. This trajectory is driven by compression distance algorithms, specifically gzip-NCD. It calculates the quantitative distance between the payload and the established grid, forcing the execution path to move based on data density, not semantic interpretation. As this happens, hardware performance monitoring units embedded directly on the chip continuously record this exact physical footprint. These units count the literal instructions fetched, the branch predictions made, and the specific memory accessed during the execution. Eventually, those vector lines stop. They land on a precise, undeniable coordinate within the lattice. If the final coordinate falls inside the green boundary, the system registers a provable match. If it lands outside, it flags as a deviation. By converting a subjective semantic judgment into a decidable geographic measurement on the hardware, the verification process becomes immune to hallucination. We can run that exact same 50-50 boundary payload, the one that confused the language model, through the hardware protocol using the attest demo tool. The hardware processes this evaluation at roughly 6 million walks per second. Out of 5 runs, the hardware returns exactly 5 byte-identical verdicts. It does not flip. The system tracks the variance across the execution, rendering it as a mathematically knowable standard deviation, or sigma. Because the physical steps match perfectly every time, the process signals a successful execution by dropping a definitive exit 0 code. It then mints an ED25519 cryptographic seal, permanently binding the input payload and the verdict to the literal serial number of the silicon chip that performed the math. Because this measurement is non-Turing complete, any third party can download the receipt and recompute the math offline without trusting the original issuer. This specific mechanism bridges compute to capital. It turns an unpredictable generative output into a bounded, independently verifiable bearer asset. The significance of this deterministic receipt activates a long-standing judicial precedent regarding technological negligence. In 1932, Judge Learned Hand delivered a ruling in the landmark maritime case of the T.J. Hooper, establishing exactly how courts evaluate industry custom. 2 tugboats were towing cargo barges along the coast when they encountered a severe storm, resulting in the loss of their freight. The tugboats sank because they failed to carry weather radios that would have warned them of the storm. In court, the defense argued they were not liable, pointing out that almost no one in the tugboat industry carried radios at the time. Judge Hand rejected the defense, declaring that an entire industry may lag in the adoption of vital precautions. Custom, he ruled, does not equal care. The core logic of the ruling is clear. If a superior, life-saving device is widely available, failing to use it constitutes negligence, completely regardless of what your competitors are doing. Today, standard stochastic LLM evaluations are the modern equivalent of the missing tugboat radios. The T.J. Hooper standard is a legal trap. The moment a deterministic hardware monitor exists on the market, an executive's choice to rely on a flawed software monitor instead is a documented failure of the caremark duty of oversight. This precedent points directly at the current boardroom. A hardware-signed receipt proving an AI stayed in its lane is the only durable legal defense against executive liability. The final stage of this architecture moves from the local machine to the insurance market, routing the hardware receipt to a third-party underwriter. This diagram illustrates the transaction flow. The buyer and the vendor transmit the receipt to the underwriter node. The underwriter extracts the exact sigma variance, calculates the tolerance band, and outputs an advisory-priced derivative contract. Crucially, this system enforces financial discipline. It strictly refuses to sell an uncalibrated price, rejecting the practice of blind risk assumptions that triggered the 2008 financial crisis. This capability structurally bifurcates the enterprise AI market. Companies that deploy deterministic hardware will be able to verify their boundaries, secure insurance, and scale their autonomous agents. Competitors relying on unverified software monitors will remain permanently trapped in pilot programs, unable to internalize the unpriced risk of full deployment. This architecture builds the necessary plumbing for institutional risk assessment, prioritizing deterministic hardware validation over standard AI reasoning benchmarks. This technology is a definitive pricing oracle. It takes the uninsurable threat of autonomous execution and converts it into a bounded, underwritable market.